In this video, I'm going to show you that allocating a small percentage of your portfolio into leverage ETFs can have a huge impact. And when I say huge impact, is that in certain cases, allocating 10% of your portfolio to leverage ETFs can give you up to like a 10x return on investment on your entire portfolio. Leverage ETFs can really give you a very asymmetric return when it comes to investing. The reason why is that leverage ETFs have a very good compounding effect. People will tell you about, oh, volatility, decay, and all that BS. Don't believe them, okay? Because these people are not basing their comments on math. The math of leverage ETFs for years. I've been investing for 20 years. I'm a hedge fund manager, where we obviously use some leverage, and the optimal leverage that you can use is something called the Kelly criterion. You should not do the full Kelly, you should do half Kelly. I might leave this to another video, but basically the Kelly criterion will tell you how much leverage you should use considering the returns and the volatility. Of course, the more leverage you use, you amplify the returns, you also amplify the volatility, but there is a sweet spot of volatility and returns and the leverage that you can use, okay? So the optimal leverage to invest is never 1x. It might be 1.5 or 2x or 3x. And in this video, I'm going to show you the power of using some leverage in your portfolio. And it's going to be mind-blowing, trust me. I'm going to show you some numbers that you will not believe in, okay? You need to see it by yourself. So let's go ahead, and I'm going to share my screen, and you can see here what am I talking about? Okay, so I've done this analysis for the last 16 years, okay? Leverage ETFs, despite what many people say out there, should not be used for short-term, should be only used for long-term investing, okay? People will say, no, don't use leverage ETFs for long-term investing. I say the opposite. Use them for long-term investing. And I'm going to show you the data in this video. I have written tons of articles about leverage ETFs. I created a course about leverage ETFs, videos about leverage ETFs, okay? And I'm going to show you how to use them correctly, okay? But the thing is that when you invest in leverage ETFs, you are increasing the volatility. And volatility is very dangerous in the short term, because if I need the money tomorrow and there is a lot of volatility, I might lose money. But if I only need the money 10 years from now, that's where the magic is. Okay, so in this chart here, now you can see SPY, the S&P 500 ETF, okay? S&P 500 ETF, normal 1x leverage, which since over the last 16 years, returned around 1,000%, 1,100%. Not bad, right? 16 years, you multiply your initial investment by 12, approximately. That's good. Okay, what about if you invest more in stocks? I'm going to compare it here now with XLK. XLK is an ETF that focuses on tech stocks, on the tech index, where you have probably Tesla, Nvidia, Apple, Microsoft, Amazon, Alphabet, and so on. So XLK returned 2,600%. Pretty good, pretty good. But are you ready to be blown away? So now I'm going to add here to the chart TECL, TECL. This is the Direction Daily Technology Bull 3X ETF. Yes, 3X is volatile, but you want to see why I say that volatility equals performance in the long term? Look at this. Boom! 84,000% during the same period. 84,000! Let that sink in, okay? 84,000%. You know, if you allocate a small percentage of your portfolio to this kind of ETFs, I'm not telling you to do speculation. This is not day trading. This is not picking stocks. You are buying a leverage ETF that invests in a tech index. That's it, okay? Passive investing. In this passive investing, you'll have returned 84,000% over a 16-year period. So these leverage ETFs, as you can see here, obviously, very volatile. There is a lot of ups and downs, but I prefer to have these ups and downs than having these flat lines down here. And these leverage ETFs, despite leverage ETFs being, this leverage ETF is a 3x leverage, right? How much did it deliver when compared to XLK. Okay, so TECL is replicating XLK, but 3x leverage. So the daily returns are 3x of the index. So if the index goes up, this tech index goes up 1%, TECL goes up 3%. If it goes down 1%, TECL goes down 3%. So there is some volatility decay, but the returns are much larger than the so-called volatility decay. And the returns are so large that this 270% divided by the 2,475% returns of XLK, it's a 34x, okay? 34x. Let me add here, 34x. So TECL returned, the 3x leverage ETF returned 34 times the return of XLK over a 15-year or 16-year period, okay? And so this has a huge impact in your portfolio, obviously. And over long periods, typically, leverage ETFs deliver much better than what they advertise in terms of leverage, because this is daily leverage. 3x or a 2x leverage ETF, it's daily resecting. So over long periods, if we are in a favorable market, of course, don't do leverage ETFs in assets that are crappy. But if you are, if you believe in tech, well, I believe in tech. Do you think we are going back to the caves, to the Stone Age? I don't think so. So I'm really okay investing in tech. Now, let me show you very importantly how a small allocation into this kind of ETFs will impact of your portfolio. Okay, so I did here two simulations, okay? Simulation one, you have 100% invested into SPY, into S&P 500 normal ETF. Second allocation, you have 90% invested into SPY, and you allocate only 10% of your portfolio into TECL. What's the worst can happen? Okay, this TECL ETF might have a 50% drawdown, and now you are 5% down in your portfolio because you invested 10% of it into TECL. So the downside of allocating, let's say, 10% into a leverage ETF like TECL, like TQQQ or UPRO, the downside of allocating a small percentage of your portfolio is not large. But the upside, as I'm going to see you, can be crazy. Okay, so look at this. The simulation here is for 17-year period. You have invested $10,000 into SPY and you got $117,000. But if you have invested $10,000, 90% into SPY, 10% only, $1,000 into TECL, instead of $117,000, you have $852,000. Can you see the difference? Can you see the gigantic upside of investing in leverage ETFs? This is why I love leverage ETFs. And if you are more risk averse, that's totally okay. Invest only a small percentage, whatever you feel comfortable with, into leverage ETFs. It can be TECL, can be QLD, which is 2x Nasdaq, TQQQ, which is 3x Nasdaq, SSO is 2x S&P 500, or UPRO, which is 3x S&P 500. Anyway, I'm constantly talking about leverage ETFs in my community in the Henrik Wealth Academy, and I have created a 4.5-hour long course because, of course, there are lots of questions, there is lots of things to address. You need to have a solid investment strategy so that when these ETFs, when they drop 30, 40, 50%, which can happen, you stick to the strategy, okay? Because again, when you look at this chart here, there is very big drawdowns, okay? Very, very big. Let me show you. Let me show you these crazy drawdowns, okay? So there is a point, this ETF, TECL dropped by 74%, okay? Here dropped by 53%. Here it dropped by 43%. Here it dropped by 40%, almost 37%. And still deliver the 84,000%, okay? But again, you need to have a solid investment strategy so that you don't panic sell when there are these drawdowns. And this is what I explain in my community, in my Henrik Wealth Academy, in my course. You can check the community for free, by the way. There is a free trial. But I'm very excited to share with people because, you know, I was able to retire at the age of 39 in Hong Kong thanks to my solid investment strategies. I invest in individual stocks, I invest in ETFs, in crypto, and having a solid investment strategy that I always stick to, no matter if the market goes up or down. This is the reason why I was able to go from broke to retired in the span of 9 years, okay? And leverage ETFs, of course, play an important role here. Now, I have also other indicators on TradingView that I share in my community that help you to manage the volatility, manage the leverage, and so on. But I hope that with this video, you can see the potential, okay, of these leverage ETFs, and that it's not that boogeyman. You're not going to lose everything. You cannot lose everything by using a 2x or a 3x leverage ETF in these indices, unless the stock market goes to zero, okay? And if you invest a small percentage, what's the worst can happen? There's a 50% drawdown, like we saw in these charts, and you are down like 5% in your overall portfolio. That's not the big deal if you are, again, a long-term investor, okay? And you let the gains to compound, to snowball. Snowball is always the secret. All right, guys. If you enjoyed this video, give it a like and subscribe, and I'll see you in the next one.